Good morning, guys. It is Wednesday, November 13th, 2024. This is Bathrobe business. I got the coffee and I got the news. So I've been off for a couple of days just simply because work demands. So I didn't produce a video on Monday or Tuesday, but I'm back here today. It was also kind of a slow period. I was still watching the news, still looking at the markets, but there was not much I wanted to report on anyway, so I'm not too guilty about it. We do have a few stories I'm going to cover today. So let's jump into Bitcoin. If you haven't heard already, Bitcoin has had a monster run. So Bitcoin is up. It hit a all-time high of 89,720. It is currently sitting at around 87,000, I believe. These are yesterday's numbers, but I believe it's currently sitting at about 87,000. Just monster performance right now. There's no question it's going up because of a Trump trade. The Trump administration very pro crypto. I would still say there's powerful inflationary pressure as well, and that's going to be what my next story is. So today we got CPI numbers coming out, and don't let the article fool you about that meeting expectations. That doesn't really matter. Like if your house burns down, but you were expecting a fire, it doesn't really mean that it's okay. A lot of these articles, some are more devious, like this CNBC one. Others, like Axios and Bloomberg, are a bit more upfront with the fact that inflation is just up. But this CNBC article tries to take a positive spin by saying it's meeting expectations. Now, those that watch my channel regularly know that I don't, while these numbers are important because I think they hit pocketbooks, I think this is incredibly important to the individual consumer. This is only half the story when it comes to inflation. Stuff like Bitcoin, gold, housing, the rise in wages, those are much more powerful indicators of inflation than anything else. Insurance premiums. Insurance premiums, don't let anybody fool you. I hear a lot of financial channels say that those are lagging indicators. They are not. They are leading indicators. Look at what's happening with car insurance, and you'll know what's happening with greater inflation in the market, especially in the United States, where we are heavy into car consumption. But let's get into the nitty gritty. So let's refresh this article because it was breaking when I first looked at it about 30 minutes ago. So the consumer price index rose 0.2% in October, taking the 12-month inflation rate up to 2.6. Now, the target is clearly 2, but also the other target is moving at a 0.1% increase. Moving at a 0.1% increase in order to bring inflation down. So that's the most that inflation should be increasing because on a month to month, that's what we've been trending down. This is up 0.2. Core CPI actually accelerated 0.3 for the month and was annually at 3.3. So it doesn't really matter if it's a meeting inflation forecast. Your core CPI is actually at 3.3, not 2.6. Now, core CPI strips out food and energy, which honestly, food is actually a big staple and should be included, but and it is obviously in traditional CPI. But core CPI is one of those things that's a little bit more sticky. It's stuff that includes things like wages, services. Those are the ones that inflate, and when they do, they don't come back down. You can technically use supply chains and manufacturing, et cetera, to bring down traditional CPI numbers, which is what's been happening. Post-COVID, things stabilized. Those things came down. That was the transient inflation. But core CPI is the stuff that does not come down based on supply chains. It's much more sticky. So let's see, what else does this article talk about? I didn't see this because, again, this is just refreshed. Inflation adjusted hourly earnings for workers increased 0.1% for the month and 1.4% for the year. So so this is inflation adjusted hourly wages. So again, this is new information for me. I haven't really looked at it, seeing as how the article was breaking when I looked at it. So the link, it will be in the description below if you want to do further reading. But that's all there is to say on inflation right now. Mortgage rates. So a couple of days ago, I reported to you guys about how much percentage of home ownership is mortgage free. So some good news for us in Utah here. Utah's share of mortgage-free homes is low, but rising. So this is one of those scenarios where our age actually plays into it. Utah's an incredibly young population. Usually mortgage-free homes are in a scenario where there are a lot of boomers that are holding on to their homes and they purchased a long time ago, have refied, paid it down, etc. Utah has a lower share of that. The good news of that is that's usually a deflationary pressure, because if everybody has a mortgage, you can't really come in at a high number and outbid somebody. You can't really the bank will always limit you on appraisal costs. There's no one that can come in with a large cash offer and just whisk the home out from under you. So this is actually a pretty good trend for Utah. Despite our incredibly high housing prices, this is actually a pretty good indicator in that most of our homes are still purchased through mortgages, from a consumer standpoint anyway. Now, the number actually is much higher than what I thought it was going to be, but it is 31.9% of Utah homes are outright owned in 2023, and that's up 3% from a decade ago. So that's not a bad change of a 3% increase over the course of a decade, especially with what we've seen with mortgages over the last 10 years. But that is a much higher number than I would have thought. I would not have believed that about 32% of homes in Utah are outright paid. I definitely know boomers that are paid in living in their homes rent-free, mortgage-free, I should say, but that's much higher than I would have anticipated. Next story. Just a minor story. This one is just about the fact that Lena Khan is, in fact, going to be exiting during the Trump administration. I think that's a tragedy. Those that watch this channel knows I'm a huge fan of her. I think she's been doing a fantastic job to curb corporate corruption, increased consumer increased consumer protection for Main Street and not Wall Street. And so I think it's a real tragedy that she's not going to be staying. Of all the things that came out of the Biden administration, this was a fantastic choice to have her at the FTC. She did an amazing job. Last story I'm going to cover is a potential investment. This is a company, if you've watched my channel, I've talked about before. So fintech company Klarna files for an IPO in the US. So they're due to debut probably sometime in 2025. This article goes in depth. So there's going to be an estimated market cap of about $6.7 billion. We don't yet know the stock price, or not even sure which bank is going to be doing the IPO. This is just a company I've always found very interesting, and I've talked about on this channel multiple times. Klarna is a buy now, pay later application, much like Affirm, which is already actually public. I think it's something that makes a lot of sense in a digital landscape. I think it's inevitable. So everybody will talk about the horrors of debt, but America is famous for it. So the United States, I don't think there's been a year in the last 100 years where debt has not increased. I think I've heard that terms. I read that term somewhere. I don't know if it's true, but in good times, our debts go up. In bad times, our debts go up. So this is bad from the idea that you should live debt-free, but it is what it is. This is how the markets work. They operate off of debt, and this is just another financial product that does it. Now, why I think Klarna is an interesting investment. I don't think Klarna actually operates exactly like Affirm, and it really is a fintech company. I argue that they are actually an e-commerce company. And so to illustrate that, I'm going to show you guys. Oh, have I not been sharing my screens this whole time? I don't think I've been sharing my screens this whole time, guys. I'm so sorry. I have my stupid program. I can't even bring the program. I think I wasn't clicking the right button. So let's share this tab. So this is Affirm's website. Affirm is buy now, pay later. This is the homepage. This is Klarna's site. So clearly a stark difference. The first one is describing actual financing. The second is talking about deals and purchases. So this is why I say Klarna, I think, is actually going to be, even though it's clearly a fintech company, is going to operate more as an e-commerce store. And that's why I think it's an interesting play. Now, I wouldn't buy it right out of the gate at the IPO. I'd give it a quarter or two. But I think in the long run, Klarna is going to be an interesting investment because I think it is e-commerce, but with the caveat of fintech inside. They offer zero interest payments. I think Affirm, being a full financing company, offers 0% to 30% depending on the terms. All Klarna stuff. Klarna obviously offers interest options as well, but they pitch the zero interest just simply because I think they operate more as e-commerce. So take a look at that. Just something to think about. Sorry that I wasn't sharing those slides, but hopefully I gave you most of the info, and a lot of you I know probably just listen and don't even watch. So that's pretty much it for today. I will see you guys back here tomorrow. I hope you have a productive Wednesday.